from a macro scale, guys, how do we get ready for the day? Neil, where do we start as far as looking at what's in play and what's in the news?
Brendan, I'll tell you exactly where we start. Where you should start is by tuning in to us every single morning at 9 o'clock. I mean, all kidding aside, we kind of do the type of preparation that we would expect a trader to from a macro level when we're at that news desk. The idea being, regardless of the style of trade that you are engaged in, there's a good chance that knowing what's going on in the overall market is going to be important to you. You come in and there's the next financial crisis coming. It doesn't matter what your style is going to be. It doesn't matter what you think about an individual name. If the market's coming down and we're gapping down 5% in every single market, well, it's not going to matter. If you think it's a long in Apple that day, it's probably going to be a sell. So you want to come in armed with that basic knowledge and have that aid your trading. It doesn't have to direct your trades, but it's going to end up being important. So what I wanted to do, guys, is everyone logs in here at Day Trader World into TIP. I think it's a perfectly good example to look at one of these reports, see what they put in there, and then understand why they're going to be important. So I just opened up the European morning call. They started here talking a little bit about a market overview. What are the futures doing? What are the overall European markets doing? Then they get into overnight news. They talk about political news. They talk about U.S. treasuries. They talk about the Asian markets, and then some economic numbers. Now, the reason why each of those are going to be important, we talked about overall market sentiment, but you also want to know what individual economic news could be important to your style of trade. If you're someone that comes in every single day and you trade in the auto sector, then you might want to know if there's a nice, not manufacturing or export numbers coming out in Germany that could affect those numbers. You might want to care about Brexit news because it could affect your trade. The worst thing that could ever happen to you is you jump into trades at 9:30 without knowing something key in one of your stocks, right? You're longing in front of a key price because you think it's going to be important on the daily chart, and then you get run over because you didn't know something about the market sentiment coming into that day. The other thing that gets talked about here, that's an important one in this report, is events during the day, and they're going to talk about a bit of an economic calendar. And that brings us to the next thing that you have to consider on a macro level. It's not just what happened overnight or what has happened that morning, it's what's going to happen throughout the rest of the day. And definitely, you want to have a look at an economic calendar. You ask yourself, what resources can you use? Well, if you're not going to go to TIP, ask yourself where we get ours. We get ours from investing.com, or you could just Google economic calendar. There's a million of them out there. The important thing is that you do grab one of those. I do believe I have a slide of what our economic calendar looks like from TIP. We can just bring it in here. And all it's going to give you is every single piece of economic data. Now, not all of these are going to matter to you. Maybe you're an oil trader. Maybe all you care about is crude oil numbers that come out on Wednesday or natural gas on Thursday. But you'd want to scan this every single day because one of these could matter. We have the two bulls here that'll tell you that it's kind of important. 3 bulls, investing.com means it's going to be a big one. And we grabbed this one from the non-farm payrolls because I wanted to show you a 3 bull. That's a massive employment number. Imagine you trade momentum off of the open every single day in the U.S. markets. You roll in, you're a little bit late that morning, so you come in at 9:15, 15 minutes before the market opens. You're like, oh, you know what? I think I'm going to jump in trading Apple or whatever big cap stock you normally play, and you ignore the fact that a massive employment number came out there. Sometimes you can get absolutely burned. I can tell you from personal experience that not looking at an economic calendar once cost me thousands of dollars. Because I was trading an intra-listed Canadian name. It was a Canada-U.S. stock. It was a buyout that traded in both the U.S. and Canada. I would trade both of them, tight range. It wouldn't make a difference. I'd be getting the spread on either one of those. And then what happened? At 10 o'clock that day, Canada came out with an interest rate decision. Right at 10 o'clock, there was a big time move in the currency spread, which cost me thousands instantaneously, and there was nothing I could do about it. All I had to do was go into the morning as part of my preparation, take a couple of seconds to look. I would have seen if I had scrolled to 10 o'clock, it would have told me about that number. I would know to go risk off in front of it. So a lot of times the economic calendar isn't necessarily about your strategy. It's about preventing you from trading blind and taking losses you don't need to.
One thing that some traders on this floor, and I'm sure on your floor as well, can do, and a lot of them will do, is set an alarm. Even, get your phone, get your alarm clock out, set an alarm. David has joined me, by the way. Welcome, David. Welcome to Monday, Trader's Edge. We're talking about alarms. We're talking about getting ready for economic announcements. And sometimes you'll get so involved in what is happening off of the open and so involved in your trading for the first half an hour that you'll kind of forget that, even if you did this preparation going into the open, once it gets to 9:55, 9:50 even, you'll totally forget about the fact that there's a big economic number coming up at 10. So, set an alarm, have something flash in front of you to say, wait a second, you might want to take some orders off while this number comes out. So David has the next question for Neil.
Yeah, for sure. So once you have a good overall idea of what the sentiment for the day is going to be, you want to drill down another level and start looking at what's in the news. So where would we be starting off looking for individual stock names that are going to be in play for the day?
Great.
And how do we define what is in play in the pre-market?
Thanks a lot, David. Two-part question there, and I think the second part's really important to address first off, and that is what is in play. You hear us say it all the time, this stock's in play, that stock's in play, we're going to be all over it. The important thing to keep in mind when it's in play is it can mean a few things. It can mean extra volume on that day, so volume above the average. It could mean that extra volatility is expected that day, whether that's already trading up a significant percentage or already trading down a significant percentage, or an expectation that something could occur throughout the day that would cause that type of move. So an example of that would be, say, post-earnings on the name. If something is post-earnings, it's likely it had a move overnight. That's going to be in play. Or you could have something happening tomorrow, which is Apple releasing a new iPhone. Now, that's not going to necessarily have moved overnight because the announcements are going to come intraday. But because you're expecting that news to come during the market hours, there'll be a bit of a volume spike and some activity then. That also makes it in play. What I wanted to do here is go to a website that I know we use. There's a million of these. You can just all you want to look for is any kind of a quote board type style site, which is going to show you advancers and decliners on a percentage basis actively in the pre-market. So this will give you in play based on extra volume and volatility. And what you care about here, and it doesn't matter what site you use. I've got Market Chameleon up, and they have most active, they've got their gainers, they've got their decliners. The important thing here is it tells you a lot of information and almost everything you need to know. It gives you your symbol, what I want to see, percent change, and then volume. Because if it's not moving, I don't care. If it's not trading, I don't care. I can see something up 100%, but if it's done 20 shares, what difference does that make to me? But if I see something up here, Docu, and we did this from last week, it's a bit of a cheat. I pulled one where there would be some stocks in play. We got Docu that was up 20% on 600,000 shares worth of trading in the pre-market. So this was a lot of volume that had gone through. That's going to indicate something that's on my watch list. So once I find something that is in play, I add it to my quote board. I start going back, making some notes on it, and then you start building your list that way. The other thing you want to consider, of course, is going to be maybe an earnings calendar as well, because then you'll know in advance when there'll be stocks that will have earnings. They might not have traded in the pre-market, or maybe they have, and this gives you the source of news. The first thing you want to do, if you don't have a news story for any of the stocks that show up in play, is do the research. And we're going to get to one of the best places to do that research with one of our questions a little bit later.
Yeah, and the next thing we have to do after you go through the initial step of saying what is gapping up and how much volume has it done, you have to figure out obviously the next part, which is why. And one of those things could be, maybe an SEC filing. A company is saying we have a new product coming out, we have quarterly earnings or something like that. A good place to start when it comes to finding out the why is SEC filings. Neil, where can we look for maybe new filings or to get a good handle on what is causing the move?
I mean, Brennan, I would love to tell you that you could do the traditional thing. Go to the company website, and they'll probably have a source there that shows you any filings. Go to the SEC website as well. Go to something like a CNBC or one of those other places. Those are all well and good, and they're all the correct answer. But you know what's a heck of a lot easier? Open up Twitter. I got TweetDeck open here so I can have multiple columns, and I love TweetDeck because it's real time. I'm not hitting refresh over and over again, which you have to do with Twitter. So what you can do on TweetDeck is I can simply pick one of my columns here. I can throw up $ and then the symbol name. I have Apple in here right now, and you'll see real time all the tweets coming in. So if Apple was in play that morning, I saw a big volume spike, I didn't know why, I would just throw that into the board, and then I'll see all the news that comes in. Now, the best thing about doing this kind of a search is I'll get to see multiple sources, right? And this will become important for a couple of reasons. Obviously, if there's a CNBC story or a Bloomberg story, everybody wants to be first. Of course, if there's a big time filing on Apple, they're going to make sure they tweet about the story so their link comes up. So you'll have all of those, but you'll also have random people talking about smaller companies as well. You'll have other traders tweeting out news that they find. So I always love putting it in here. A lot of times you'll even see me use this during the show, or even our interns will be using it during the show. I know Brendan does as well, just to verify stories. And this is really important. There was one time when the Associated Press had their Twitter feed hacked. And in this instance, there was a tweet that came out saying the White House was attacked, there was an explosion, the markets went in the tank. Immediately, and there's Sean, I love it, thank you, buddy. But immediately the market starts going down. Sean and I were both on the floor at this time, and the first thing I did was go into my tweet deck and try to verify the story. And all I saw was people saying, oh my gosh, explosion at the White House, over and over again. Source, AP. Source, AP. Associated Press, over and over. What you didn't see was anybody else reporting the story. If there was an explosion at the White House, CNBC would be covering it, Fox would be covering it, there'd be cell phone pictures everywhere. So instantly, anybody with half a brain realized that one source, probably fake. And that's exactly what it was. Market came right back up. And this is why I love TweetDeck, because the first thing you always want to do when you find a news story, and Brendan mentioned this a couple of sessions ago, is verify it. And here you'll get an entire stream of all the stories. So if I see it repeated a couple times with a couple of different links and a couple of good check-marked websites there, I definitely know that I'm going to be able to trust it. And it's just a good place to go to get quick information, especially in the morning when I've got a symbol list of 20, and what you do actually want to do is go through all of them. Every single stock that goes onto your watch list should be something that you've vetted to make sure there is or isn't news, and you know exactly what that news is.
TweetDeck, I would even go as far as saying, is a vital part of your day as a trader, finding the news and knowing the news. And one of the great things about TweetDeck that I love, or Twitter in general, is the fact that you'll get other traders on there. You'll get other traders who are also tweeting, wanting the news. So you get a kind of a feel of whether or not something is legit or not. There's a number of users on Twitter who all they tweet are links to SEC filings. Stock News Now, at Stock News Now, is one of those. All they do is tweet SEC filings, so that's a really good one that I like. The next one, David has.
Yeah, so as we're making our short list, we want to make sure we go through and we know why we're looking at each of these stocks. We want to verify all that news that's coming out about them. And then we want to discuss our technical levels. So, Neil, what approach should a trader take to identifying these key support and resistance levels?
Fantastic question, David. All we're going to do is jump to a daily chart, and this is going to follow almost exactly what my routine is. I know Sean's is very similar, Brendan as well. Once we've done all these different steps, we've looked at the macro, anything that could be affecting any of the names that we're going to look at in the overall market. We've looked at the economic calendar. We've marked off all the different times during the day when we could expect there to be moves that might want us to take risk off, put risk on. And the next thing after that was finding some stocks on our list. Now, once I have a list of symbols and I know what the news is, the question becomes, well, how do I know where to get in? How do I know where to get out? How many shares should I be taking? All these parts of structure, I need some key levels. I almost never consider getting into a trade if I don't know where I'm getting out. And this is where the daily chart, the intraday chart is not going to be any good for you, because you come in, it's before the market's open, maybe there's pre-market volume, maybe you can find a level there, maybe you can't. But on a daily chart, the historical prices over a longer time frame are going to give some nice levels. And what you're looking for here are some spikes up and down throughout maybe the last few months in the stock, depending on how active it's been. Sometimes you have to go back even further than that, and that's why I use a daily. But I want to see some obvious points of consolidation, hopefully that have been key more than one time. And I just happen to have a chart here of Lululemon. I picked this one at random, because I think, honestly, you can almost look at any daily chart and find at least one or two key levels. So I called this one up randomly, and I found this 160 level. Obviously, it was a great long a few months ago on this name. But the key thing, you first look back here. I'm just going to jump aside because I know you can't really see. Way back here in February, you had a little spike up to 160, you rejected and came back down. Then when it approached the second time, you had a massive breakout at that price. So once, 160 was important. Continues along trading, and we come back down, a little bit of a sell-off, and we had a spike where it held 160. You had one day where it wicked below and immediately came back, so now you've had a hold at that price as well. So this is one of those situations where if I was coming in after this hold, after that breakout, and this day happens, When it retakes the 160 level to the upside, that's an obvious long. Certainly you can see you have a support level there. You could throw in some other lines if you wanted to. There was a bit of a top end made through that 190 to 195 range as well that turned into a nice breakout trade. Now, what I like to look for first isn't just one instance of importance. I don't want to only see it hold that level. I also want to be able to look back and see, was that level important more than one time? Every now and then, you might only have one indication. That's absolutely fine. I think what happens in a situation like that is my confidence might be a little bit lower. So maybe I take a few less risk units as opposed to where I had a key level that has been important 2 or 3 times in the last few months. I might double up my risk or have a little bit more confidence. A lot of times you'll hear about traders scoring a trade. They'll call it a 9 out of 10, a 10 out of 10, or they might say it's worth 20% of my day and they'll put that much risk to it. However you choose to measure it, that's not necessarily that important. It's just that you're making those distinctions with how much reliability there is on those key levels and the daily charts where you can find it.
And we talk about that all the time, guys, how you go out to the higher time frame, you find those key levels. And just to, kind of reiterate what Neil was saying there, it's the basic principle is simple. If it's a support level you're looking at, you have to assume that there will be buyers where there were buyers in the past when price revisits those levels. So support is support until it's not, and that gives you your out. That's why we always look for those key pivot points both on the support and resistance side. If there's sellers, obvious sellers in the past at a key level, then you have to assume that those sellers will still be there until they're broken and it becomes support. So you have the final point here.
I do. Last question for you, Neil. So as we're getting close to that market open, are there any final checks, preparations, anything last minute that you do just to make sure that you're confident with the approach you're taking for the day?
Absolutely. So one of the first things I'm going to do is make sure that I know everything in my calendar that's going to be important throughout the day. The second thing, and probably the most important one, is any trade levels and ideas that I have off of the open. Let's just imagine for whatever reason that we're coming in on this day here, and I know that this sort of 195 is going to be a support level. We had this little top that got made here. You have a sort of opening above after a big spike to the upside. So what I might say to myself is if I know 195 is going to be support and I want to be long in front of it, the first consideration I have to make is how much share size do I want to take? How much do I want to risk? So I've got to make sure I look in how much volume went off in the pre-market. I could have found that from Market Chameleon initially, but I'm going to go to my level 2 to confirm that. I want to see how much liquidity is on the level 2 to be sure that there is an ample liquidity for the size that I'm going to take. And importantly, I always set my key size before the trades. I don't flip to the stock right when it comes to 195 and just say, oh, it's coming to my price, let me go long. No. I've already got my stop order for the downside. If I'm going to take 100 shares, I've already changed my default to 100 shares. I already have my stop order in, if possible. I'm already locked and loaded, ready to get in. So all I have to do is hit enter or just queue up the key and hit enter. My risk parameters have all been thought of. This isn't always going to be true. What might happen is the market opens up and suddenly liquidity is not what you expect and you have to change things on the fly. That's absolutely fine, but to the extent that you can control that, you absolutely should. Every stock on my watch list, I will have predetermined how many shares I want to take by looking at the amount of volatility, looking at the amount of liquidity, knowing what the key level is, how much upside was there, how much downside. That's why every single stock, find the news, find the key levels, look at the level 2, look at my daily chart so I know how much upside I have, how much downside, and I can make all those decisions to the best of my ability. So when 930 hits and you're getting into 5 or 6 symbols at once, you're as prepared as you possibly can be.
Great information right across the board as far as having a plan going into the open. We talk about knowing your levels, having a plan, being able to execute on those levels when they do come into play. So thanks, Neil, for that. Again, depending on what type of trader you are, what type of trades you like to look at, there's going to be a vast differences as far as your preparation goes for, your day. But thank you, David, for helping out with that segment. I hope you guys learned a little bit. A very general discussion, guys, again, when it comes to preparation, but I hope you can kind of take key points away from that and be able to, apply them to your prep on a daily basis and maybe help you go a little bit when it comes to being successful at the open. Trader's Edge in the bag for Monday. Let's head over. Europe is closed, guys, if you didn't know. Let's head over and have a little chat about Europe with Nikki.